welcome to our first time buyer series of the Five Star Mortgages podcast. We have here today two of our brokers and Marta, founder of Five Star Mortgages, and we have Pavel and Maciej. So today we're going to be talking about mortgage features and what you should be looking for and be aware of as a first time buyer. So we're going to start to talk about mortgage term. So as Marta's been doing mortgages the longest, maybe you can start by telling us what is a traditional mortgage term.
So when I started, which was quite some time ago, your average mortgage term was 25 years, and I think that was historically what everyone went for. As the time goes by, and we know the property prices are going up, interest rates are going up, this term's now extending, so it's very rarely 25 years.
Yeah.
Yeah.
So Pavel, you've obviously been helping quite a few first time buyers. What have you been seeing as a typical mortgage term with current customers?
It's really interesting what Marta mentioned, 25 years, because I was literally, when I was buying my first property, I was set on 25 years to get it. It almost felt like a norm, but nowadays I think 30, 35 years, I've seen those coming quite regularly for the first time buyer, obviously buying the first property.
Yeah. And Maciej, what's when you're working with first time buyers particularly, what's helping you set the term with the client?
Well, normally we ask clients to set a budget,
Yeah.
just to make sure that they have some particular amount of money they're ready to use towards the mortgage payments, and that's how we are trying to set the term. Obviously, we are trying to set it as short as possible,
Yeah.
so they pay as little interest as they can. But most of the time, people are going max straight to
term.
the retirement age, and then we are trying to make it shorter if possible.
To work that back. So retirement ages is an important one then. So state retirement age is 67, but what are you
Or
seeing
eight,
in terms of?
depends how old you are, Mark.
Yeah. But yeah, I think I sneak in there at 67
Yes, you do.
at the moment, as long as Rachel doesn't cause any more problems.
Yep.
So, but what are you seeing for mortgage lending? What's the retirement age for mortgage lending?
I would say 70 for manual workers
Yeah.
and 75 for office-based workers most of the time.
Yeah. So as long as you're in an occupation where you're able to work, mortgage lenders are quite happy to lend
Yeah.
them.
So generally 70 for blue collar and 75 to 80 sometimes for for white collar workers, isn't it?
Yeah.
So,
So rather than just going for the shortest the traditional mortgage term or a mortgage term up to retirement, you said, Maciej, that you should go for as short as possible.
Yep.
What's the benefit for the client of paying more and taking a shorter term?
Obviously, if you take the maximum length of the term, our clients will end up paying a lot more interest throughout all these years.
Yeah.
So if it's possible to make it shorter, let's say to 25, 20 years, then they will pay a lot less interest overall.
Okay.
So it's always better, if affordable, to get the mortgage term as short as possible.
As short as possible. And Pavel, so what can a client do or a first time buyer do if they start off with a really long term and they want to try and shorten it down?
I think the best thing to do is if the income actually allow it, is making overpayment on the mortgage,
Yeah.
because that automatically decrease the amount of debt they got and therefore decrease the amount of debt. The first real opportunity is when we're actually doing remortgage, you
Yeah.
know, when the fixed terms rates or the deals that they are on coming up to the end. But yeah, making overpayments really make an impact and can positively then, impact what you're actually going to get on the end of the term.
So paying a little bit extra each month can shorten the term, save you quite a lot of money in the long run.
Yeah, absolutely.
Yeah.
It will add up. With making those small contributions will have a huge impact after 2 or 5 years.
And I remember, Marta, when you first started doing mortgages, the interest rates were quite high and then they came down, so everyone's payments was lower, and you was doing quite a lot of work at that point at the remortgage to shorten the mortgage term. So how does that work?
Correct. So basically, when it comes to remortgage, two factors: the property prices normally, historically, would increase over a period of time, and if the rates decrease, then you could remortgage. And let's say someone was paying £800 and they're still happy to pay £800. But at the point of remortgage, because the interest rate was lower, we could have reduced the term. So it's quite popular. It was back in the day.
Yeah.
As the interest rate decreases, then we would work with the clients to reduce the term. I mean, the first, I think one was the first mortgages that I did. I've reduced someone's term by 12 years and they were well impressed with that. So look, it is the fact that you are taking 35, 40-year term mortgage doesn't necessarily mean that you're going to be paying that for the rest of your life.
You're going to try and work with a broker, especially.
Absolutely. Work with the broker.
Every 2 to 5 years. So that kind of
review those rates,
Yeah,
isn't it,
yeah.
on a regular basis? That's what it's all about,
Try
I
and-
would say.
try and get out of debt.
Absolutely, as quickly as
Yeah.
possible.
Yeah, I've
Yeah.
just had a client for a remortgage. I
Yeah.
reduced his term from 25 to 12 years
Wow.
because
Wow.
that was his budget and he was well happy with it. So,
Yeah.
yeah.
So it would be interesting, Maciej, did you actually look at the mortgage quote and see the total of interest payable over a 12 and 25?
Yeah.
Can you remember the saving?
I can't, but yeah, it was massive.
It was
Must
like
have been
tens
significant,
of
yeah.
thousands of
Yeah.
pounds. Yeah. So I think the summary there is then first-time buyers should be working with a broker, establish an affordable payment as short as possible, and then continue to work with that broker over the long term to try and get it paid off as soon as possible.
Absolutely. I would say continue that relationship throughout the process, isn't it?
Yeah.
Because we're there to advise and help people get out of debt as quickly as possible.
Yeah. So that brings us on to then, we've been talking quite a lot about the remortgage event. So what causes a remortgage is when an initial deal comes to an end. So let's talk about the types of deals that you help first-time buyers with. So fixed rates. What's a fixed rate? What does a first-time buyer need to know about a fixed rate? Pavel, you look like you're poised to say something there.
Well, I think the easiest way to understand it is just a product that allows you to keep your monthly payments at the same level
Yeah.
for that period of time, whenever it's a 5, 3, or 2, 3 or 5 years.
Yeah.
Or 7, or 10.
Or 7 or 10. So there is a number of it, but something that allows you to keep at the same interest rate for the period of time and give you that stability. That's the important thing of it.
Yeah. So that can be good for people who want to budget. Maciej, is that right?
Yeah, absolutely.
Yeah.
And you can see a lot of first-time buyers fixing their fixed rates for 5 years
Yeah.
because they want to know exactly how much they're going to pay for their monthly mortgage payments.
Yeah.
It's really important for them to be able to set up their budget.
And the theory, I suppose, behind that long term, hopefully you'll have had 5 pay rises, or if you're self-employed, your business has grown a little bit, and
Yeah.
you're not
It
quite.
happens quite often that these are very young couples with very young children.
Yeah.
So then possibly the second person is going back to work and increase their income. Then they can do it the other way as well. Yeah.
Yeah, that's
So-
interesting. So that's Marta. You've worked with clients before, where the fixed rate, you don't necessarily want to time the fixed rate to become renewable at the same time you're starting a family. Is that?
Yeah. So basically, a lot of people, what's going to happen if it's a couple, no children, they'll come and buy the property.
Yeah.
They wouldn't fix for 2 years because possibly they're going to come back to remortgage when the baby is due, or they have a family, and that's why they would historically always choose a longer term fixes, so they
Yeah.
can, or another example, if the house needs doing, isn't it? So they will go for a 5-year fix because it allows them to do all the repairs to the property, increase the value, and remortgage at the higher.
With a bigger deposit.
Absolutely. So many scenarios, isn't it?
Yeah, we're going to have a whole new podcast around deposits.
Absolutely,
so watch this
yeah.
space. But that's a big topic.
It's
a very
another-
big topic.
Another topic, yeah.
So if you're not going fixed, the alternative is a tracker mortgage. So how does a tracker mortgage and who's that good for? Mache, maybe?
Not many first-time buyers use tracker mortgages, to be honest. But tracker is great. Every time, what the tracker means, every time when the England-based Bank of England base rate goes down,
Yeah.
then the tracker goes down as well. So your mortgage payments will fluctuate.
So it's good when they're coming down
It's great when they are coming down,
because your interest rate comes down.
but
and
there is a
therefore-
risk that they
Yeah.
might actually go up as well.
Yeah. And that means that your
It's-
payment automatically goes up. then.
Yes, that's
Yeah.
correct. Yeah.
So the rates basically tracking the
Mm.
Bank of England's
So if you're
base rate.
a first-time buyer and you've got a comfortable budget and you want to take a bit of a gamble, you could gamble that rates are going to come down and
Yeah.
choose a tracker
You
mortgage.
could, but
Not many people
not
do.
many people do. I think most of first-time buyers are on a budget.
So what happens then? What this standard variable rate that kicks in at the end of a fixed rate or a tracker rate? What's this all about?
Scary, isn't it? Because obviously standard variable is much higher than fixed rates.
Yeah.
And what happens if you, let's say, your fixed rate finishes, the bank will automatically put you on standard variable, which is sometimes double what they are on fixed rates. So what you need to do, you really can't leave it last minute. At least I would say 3 to 4 months before the end of a fixed rate, you need to contact the broker and look at the alternative options.
Yeah.
Because the worst you can do is just go on to standard variable, because the only winner is the lender, isn't it? Because the interest you're going to be paying.
And as a business, Pavel, when do we contact our clients?
We're normally starting the process about 6 months before
There
that
you
rate
go.
Yeah.
finish.
Like a good broker should.
So we can actually establish our first contact and start planning what we're going to do depending on the circumstances.
Yeah. So standard variable rate is the lender's default rate that you end up
Absolutely.
on if your deal expires, and nobody likes that.
No,
Okay.
absolutely not. Well, the lender does.
So occasionally, I don't see it so often, but occasionally some lenders offer what's called a discounted rate, which is
Discount of the...
so it's a bit
Discounted.
similar to a
Yeah.
tracker rate, but it's not automatically following the Bank of England rate. So they're not so popular these days.
No.
And when I used to do mortgages, they used to have capped and collared rates, but as newer brokers, you've probably never seen one of these. But a capped rate means that if the interest rate you're on basically a variable rate, but if it goes up, you
Don't
you
really
hit a
see those,
ceiling.
don't you?
No, they've gone. They're not so popular.
Yeah, only read about them in CMA books.
Yeah. And the collared rate means that if the rates drop, it won't drop below a certain limit, because in the financial crisis, when they didn't have collared and the base rate went down to nearly zero, all the lenders were crying because they weren't making any money, basically. So we've talked about then what happens at the end of an initial deal, and the motto is speak to your broker early.
Speak to your broker, as Pavel said. We do contact the clients 6 months before. With most of the lenders, you can start the process 3 to 4 months before the end of a fixed rate. So please don't wait till the last 2-3 weeks.
Yeah. So moving on to another feature of mortgage products then, when you're looking for a mortgage deal, is the mortgage lender's arrangement fee. So tell us, Mache, a bit about lender's arrangement fees.
Mm-hmm. There is a lot of products with arrangement fees. When you take them, the most likely the interest rate is going to be lower than with a normal product.
So you've got lower rates with higher arrangement fees,
Mm-hmm.
and higher rates
Without fees.
Without fees at all. So, Marty, who works? Which one works best for a first-time buyer then?
It's not right or wrong, I always say.
Yeah.
Look which one's the cheaper overall.
Mm-hmm.
However, a word of wisdom, certain lenders are quite difficult when it comes to repaying the arrangement fee if the sales fall through, for instance. So I would probably recommend to add the fee to the loan at the onset, and then if you're that desperate to pay it on the completion
Yeah.
day. So
Because there's a downside of adding the fee. Do you know the downside, Pavel?
Of adding the fee to,
Yeah,
to the loan.
Yeah.
Oh, that will be obviously, yeah. It's then stretches with the whole mortgage for your term and,
Yeah.
and add to the interest rate you're paying, obviously. But
Yeah.
yes, most of people will go for that options from my experience.
Yeah, if you add £1,000
Yeah.
fee to your mortgage, then over 25, 30 years, you could end up paying back 2 or even 3,000
Yeah.
Most likely,
pounds
yeah.
because of the interest, so it costs you a lot more. But yeah, I remember one of my clients paid the fee and to a certain lender, which we shan't say on open air,
No.
and they wouldn't give the fee back, and everyone was very upset about the situation.
Yeah.
Everyone was very, very, very upset about the
What you
situation.
could do, you could reduce the loan by, let's say if the fee is 999, you can reduce the loan by 999 and add it on as well. So
Yeah.
there's different ways of
So if you
dealing
need
with
a
it.
mortgage of 200, take a mortgage of 199 and add the fee.
Yeah.
That's a good tip. Good tip indeed. And then basically you're keeping the money in your pocket if something
Correct.
goes wrong.
Yeah.
You haven't got to try and fight to get it back. What else can we talk about? So we've talked about which rates are kind of popular with first-time buyers and mortgage terms. What top tips have you got for first-time buyers then, Maciej? What could you offer?
Don't assume that you can't have a mortgage.
Oh, yeah.
So there is a lot of people asking all their mates,
Yeah.
can I have a mortgage? They try to Google it. There is
Yeah.
so many inaccurate information on the web, on any websites.
Yeah.
So don't be afraid to call us. Don't be afraid to ask. There is no stupid questions. There is no silly questions. I would always encourage to come and see us. All the consultations are free.
Yeah.
So everyone's more than welcome to come along, have a chat with us and see if it's actually possible or not.
Pavel, what top tips have you provided to first-time buyers around the products and lenders at the moment?
I think one of the big thing is if you can afford it, make some payments within reason. I don't think I ever come across a customer that was so eager of repaying that they actually hit that point where they had to pay some penalties for it, because normally lender would allow 10% of a payment. So I would say that that's a big one to actually reduce that debt, to actually try to clear it as soon as possible.
Yeah.
Yeah, and obviously, yeah, stay in touch with us if you've got any questions. We're there for you throughout the journey.
That's good,
You know.
actually, because what I found as when I was mortgage broking and clients were coming and doing a little bit of shopping around, and I would always see that they'd been to another broker and it was 25 years, 30 years, 35 years, 40 years, but why not 32? Why not 27? It's trying to fit that mortgage to your budget, isn't it? So making those overpayments, like you say, Pavel, can help, but getting the term right at the start can save a lot of money.
Absolutely.
And Marta, what top tips have you got for first-time
Dunno.
buyers around
They
products?
pretty much covered it also, but what I really want to add is like working with the broker when the market is volatile, or when you start with the higher interest rate. If you're working with the broker throughout the process, the whole house buying process could take up to 6 months. So we on top of your mortgage, if there are any reductions in the interest rates, we will look after you till the very end. So if there are any reduction in the interest rates, we're going to change. Once you receive an offer, it can also be changed. The product can be swapped to a cheaper rate. So it is important to work with someone that is going to hold your hand throughout the whole process. I think that's what I would say.
As a broker, you're monitoring that rate, and the admin team that support you monitoring that rate.
Yeah.
Whereas if you go off direct to a bank yourself, the onus is on you to try and monitor that and call into
Absolutely.
them, because they're not going to.
Yeah. So
That's
if
it.
you
They haven't
receive
got
an
the
offer from
resources,
your
have they?
bank,
So
they're just going to say that's your offer, and I think as a customer, you're not able to monitor the market to see whether there were any reductions or not. So we do. We check them every day, don't they?
super. So there we go. There's some top tips. We've talked about mortgage term. We've talked about the different types of interest rates. What's good for you? What's how we set that mortgage term? What you can think about, and you had a top tip from everyone. So take Maciej's advice. Come and speak to us, and no question is a stupid question. And you shouldn't worry about whether you're ready or not, because the earlier you come and see us, the quicker these guys can give you a plan and get you into home ownership.